What's our number one method for finding winning stocks? Stocks that are going to generate double-digit returns or more. You've possibly seen us use Stockopedia before to present stocks, but Stockopedia is so much more than that. It has a ton of tools that serve you up portfolio-ready stocks on a plate.
We want to know whether the stocks that Stockopedia recommends are any good, because if they are, it will save you a lot of time picking stocks. You'd only have to investigate the highly rated stocks on Stockopedia to find market-beating returns. So in this video, we're deep diving into 3 of the top rated super stocks on Stockopedia as we enter 2021 using 3 of their most popular selection tools.
We'll tell you whether or not we agree that they are worth investing in, and how you can find your own stocks using this groundbreaking service. Let's check it out.
Welcome to Unshackled.com, the investing and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe. Stockopedia's track record. First up, how does Stockopedia rank stocks? It uses all manner of market data to rank every stock by quality, value and momentum, and then gives them an overall score out of 100 called the stock rank. It does this for all stocks in the UK, US, Europe, Canada, India, developed Asia and Australasia.
Here's how the stock rankings have fared since 2013 for UK stocks, with the higher rated stocks in tones of green and the lower rated in tones of red. It's incredibly clear cut. Stocks with a higher ranking ended up doing better than stocks which had a lower ranking. For UK stocks, the system seems to work very well.
As international investors, we're also interested in the US. Stock ranking performance is less clear cut here, but it did work pretty well up until the March 2020 crash, at which point the US market went crazy and poorly rated volatile stocks outperformed their more stable counterparts.
This purple line is the S&P 500, which looks funny because a relatively small number of stocks can have a large impact on the S&P 500. What we're interested in is how the stock rankings perform relative to each other. It seems the stock rankings do work overall, which means a highly rated stock is more likely to perform well than a low rated stock.
3 tools we'll pick from. Stockopedia has loads of screener tools to find top stocks with specific characteristics, but today we're just going to look at the 3 most general tools to find stocks with market beating potential, and take the top listed stock from each screen, whatever they may be. The tools we'll use are the screen of screens, the screen with the highest returns, and the super stock rankings. To keep it interesting, we'll look at a mix of UK and US stocks.
Screen of screens. First up is this tool, the screen of screens, and we'll turn on UK stocks mode. It picks stocks that are appearing most frequently across all the filtering tools on the site. These top 2, Sylvania Platinum and Plus 500, are recommendations of 11 screens each, and so are the most frequently filtered for stocks across various different analysis methodologies. Note that the next one down is CMC Markets, which we reviewed in summer 2020 and could have bagged you 34% gains from where we bought it at in August, reaching highs of 422p at one point.
We'll take the highest rated one at the top of the list, but seeing as it's a tie in the number of screens, we'll take the one with the best results from the next 3 columns, so Plus 500. FYI, an F score is the strength of a company's financial position, with 9 being the highest possible.
Plus 500 is one of those internet companies that have been kicking ass since the COVID crash. It's an online trading platform dealing in CFDs, which covers stocks, commodities, options, ETFs and Forex. It's not an approach to investing that we recommend for beginners, but the platform has grown very popular.
We look at Plus 500 like we would, say, a tobacco stock. Not a product we use ourselves, but something that is popular with plenty of people, so it makes it a stock at least worth considering. To its financials then, and Plus 500 has glowing scores across all 3 of Stockopedia's main metrics, with an overall ranking of 99 out of 100.
Stockopedia lays out almost everything you need to know about a stock on one page. If we scroll down, we see its forward PE ratio is amongst the best in the industry and in the joint UK and Europe markets at 8.2, and on these 3 valuation metrics that consider ability to make money, it does quite well.
There's one of the 11 screens it qualified for, which we could flick through, and its quality metrics couldn't get much better. This means it is making a 91.7% operating profit for every £1 invested into the business. That's the 29th highest return on capital out of 7,500 companies in the UK and Europe.
Scooting on down, its health scores are pretty safe, and after a blip in 2019, its profits are back on a power march of growth. Its 2021 numbers are expected to be down on 2020, while it grapples with the effects of new legislation in Australia. More on this soon. And if we go down further, it has a high dividend yield and negative net debt, which means it has more cash than debt, a good place to be.
Those 2021 figures are down because a large part of Plus 500's business is in Australia, who will introduce stricter rules for CFD platforms in March 2021, mostly to stop them from robbing customers who don't know what they're doing. These follow rules brought in throughout the last decade in both Britain and the EU to limit what CFD platforms can do there, but Plus 500 bounced back strong from those. A glance at the company news window tells us about recent UK legislation that bans the sale of crypto derivatives to retail investors.
The UK and Australia rule changes might be the first in a new round of clampdowns. Whether that hurts the CFD industry or makes it more secure and mainstream is yet to be seen. This is where you take what Stockopedia have served up to you and apply your own judgment about the future of that company and its industry. Sadly, no software can do that part for you.
Screen with the highest returns. We'll go for a US stock next, and we'll pick from the top of the screen with the best track record for returns, which is the top value rank screen. It's top whether we look at the last 5 years or the year to date.
As a pair of lads from the north of England, we have to accept that our ability to analyse an obscure US small cap stock without any local knowledge is not the best. So we first sorted the list by market cap and then gone with the top one, AT&T. A quick hover over the stock tells us it's worth looking at. It's got a high value score, which is what qualified it for this filter, and it's got a good quality score and acceptable overall score. A low momentum isn't necessarily a bad thing, and some contrarian investors would say it's a good time to buy.
AT&T took over Time Warner in 2018. That's right, the same Time Warner famous for their movie business. And the movie industry isn't exactly doing great as we enter 2021. We can see that once the dust had settled from the takeover, it was viewed as a good thing by the markets. Right before COVID hit, AT&T was on the march upwards.
Could AT&T be one of those businesses that recovers strongly once life returns to some kind of normal? They're not in a bad place really once all this blows over. This is a list of all the businesses that AT&T now owns following the takeover, the main ones being HBO of Game of Thrones fame, the CNN News Network, DC Entertainment, they own Batman, the AT&T mobile phone network of course, massive in America, and movie groups Warner Bros and New Line Cinema, with movie rights to Harry Potter and Lord of the Rings amongst many.
Financials wise, they have a healthy PE ratio. The rubbish peg is understood to be a result of these unusual times for the movie industry. It qualifies for 3 screens and is forecasted healthy profits going forwards.
Worryingly, it is sat on a ton of debt, hence the red flag on the scores, but we see in its cash flow statement that a lot of this was to buy out Time Warner, and with COVID, it has not yet had the chance to start cashing in on that investment.
It is slowly paying back the debt and has been able to keep its reputation as a champion dividend payer. All in all, AT&T looks like a decent pick to us for a long-term investor who is a fan of regular income.
Super stock rankings. Now for a small cap, super stock. Looking at the UK listing of the overall super stock ranks, the one rated most highly is Winstay, a small cap with just a £65 million market cap. Let's go and see what's so great about this little tiddler of a stock. Winstay is a Welsh-based manufacturer of agricultural products like animal feed, fertilisers and seeds.
This might be a part of the UK market that benefits from Brexit. Its numbers are mostly great across the board, from price and valuation through quality and health. It has performed pretty consistently over the years in revenue and profit. It pays decent dividends and has consistently had a negative or negligible net debt.
We don't really know if Winstay will be a decent investment or not. Stockopedia certainly thinks it's got something going for it, and we can't see anything obviously wrong with it. This is an example of the software serving up a cracking recommendation that you might look into further, in this case if you think that UK farming is going places.
The history of this stock shows that it has been priced above 650 pence on 2 occasions, so is clearly capable of climbing from where it sits now at 324 pence. Considering the business looks to be in a similar position profitability wise with what it was at the time.
Try it for yourself. Hopefully you see the same potential as we do in software that can serve up awesome investment ideas like this one does. If you want to have a play around with Stockopedia for free, go to moneyunshackled.com via the link below for a free 14-day trial offer. If you find you like the service, those who signed up with our link will also be given a 25% discount of their first year.
Question of the day, will you be investing in any of the stocks showcased today? Let us know in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.